The No Nonsense Roundtable. It's a weekly show broadcast on Rochester, New York's 50,000-watt iHeart radio station, News Radio Wham 1180. The host, Dom Geneva, interviews guests from all walks of life, all with amazing stories to tell. What you are about to hear is a recording of a previous broadcast without the breaks and commercials. Now, here's host Dom Geneva.
Well, welcome everybody to another edition of the No Nonsense Roundtable. We're here today with Laurie Baker, President and CEO of Summit Federal Credit Union. Welcome to the show.
Hi, Dom. I'm very happy to be here.
Well, the thing is that I like having shows that educate people about things they may not be all that aware of. And the Summit Federal Credit Union has a long history of community involvement, and we're going to get into that in a little bit. But it's fascinating to me, the financial services that are available to people. There's banks and credit unions, and there's these online banks now where you don't even talk to a human being anymore. And let's talk a little bit about first of all, you and how you got to be the president and CEO of this organization. You don't look that old, you might be.
Thank you, Dom.
You might be 30. How'd you make it this far, looking that young, and especially in a business that's as stressful as yours must be sometimes? So the question I like to ask, the really silly question is like, what did you want to do when you were 10 years old?
When I was 10 years old, I wanted to either be an artist or a designer. So totally different than the path that I eventually took.
So where was the pivot with that? That's completely different. That's a right angle.
I don't know when that changed, but I'm still interested in art. So it's, I think, more of a hobby now than a career. Do
you do anything with it yourself? Is it visual arts or paintings, photographs or whatever? Or is it more performance stuff and whatever?
I haven't had the time necessarily to paint or draw myself recently, but I do enjoy museums. I do enjoy looking at art, and maybe someday I'll make time for that.
And are you a Rochesterian?
I am not. Well, I am now.
Now, yeah.
No, I am. I actually grew up on Long Island.
Oh, so did I. Where did you grow up?
I grew up in West Islip.
And I grew up in Glen Cove, and I went to Holy Trinity High School in Hempstead.
And I went to West Islip High School.
Ah, okay. And so tell me about where you went to college, how you got involved in the financial business.
So I'll say I grew up on Long Island. I was a credit union member all of my life. I was actually a member of the Bethpage Federal Credit Union, which, if you're familiar, is the largest credit union in the state. Mm-hmm. So I was familiar with credit unions, and then I attended SUNY Geneseo.
Okay.
So I went to college at Geneseo. I went back home for a little bit, wound up going to Binghamton to get my master's degree. And while I was there, I needed a job. And I took a job as a teller at a credit union in Binghamton.
Really?
I did.
And you got to be the president and CEO of the... Well, was it with Summit or somebody else?
It was a different credit union. It was outside of the area in Binghamton. Okay. I wound up moving back to Rochester to be near my sister, who had also graduated from SUNY Geneseo. And then eventually I took a job at the Summit.
So what's the career path for that? I mean, from teller to CEO, I mean, obviously you didn't go from one right to the other, no matter how talented you are.
I've done a lot of different things. I was a teller at the former credit union. I was a member service representative. I was a loan officer. I managed their visa department. Then I moved to Rochester, took the job at the Summit as a senior loan officer, wound up, it was a big growth, a time of big growth for the Summit, wound up being the lending manager, then the VP of lending, then I had human resources too, and took over member investments, and then I became the chief operating officer, and then...
Wow.
In February of 2020, right before the pandemic, I became the CEO at the Summit.
I mean, talk about challenging times. I mean, you've been through, how many ups and downs in the banking business and the stuff that happened years ago with the 2008 with the financial crisis. I think, one of the things I learned in college was, the 4 C's of credit. And people people just don't understand credit sometimes, their own credit and what goes into credit. Let's touch a little bit about that, because people are, borrowing money and whatever. Let's talk about what they need to know financially about borrowing money and what goes into their FICO score and how you make a decision about a loan.
Like I tell my kids, your credit and your credit worthiness is one of the most important things that you need to work on. But I think the biggest thing about credit is understanding capacity, understanding what you can afford, and not overextending yourself, even if it's offered to you.
Well, and I have to tell you, I ask that question a lot of times, and that's the first time somebody touched on what I think the problem was back in 2008. Is that people come into the dealership and they would say, well, I have this loan on the car and the loan's $300 a month and I want to get this other one. It's going to be $800 a month. And we're like, okay, we're going to approve you because you've been paying your bills. Well, no, your debt to income is not what it should be. That's why sometimes people come in and realize why they were turned down for a loan, because it is a capacity thing. Is you paid people all this time, but you may not be able to pay them in the future.
And sometimes people aren't happy when they're turned down for that loan because they want that car payment or the car that's tied to an $800 car payment, but it's really not in their best interest. And we wouldn't be doing the right thing if we approved that car loan.
Well, and the thing about credit unions is that you are tied to the community. It's not like you have one industry like what happened just recently in California, where they're all tied into the industry. It was all IT stuff and whatever, and that there was a run on the banks because everything was in just one industry.
Well, the Summit was founded in 1941 by the employees of Rochester Telephone Federal Credit Union.
Oh.
Or not Rochester Telephone Federal Credit Union, but Rochester Telephone. So at that point in time, we were tied to one organization. But over the years, we've expanded our charter and we're tied to many, many, many organizations in the community. So you're right, diversity is very important.
Well, how many branches do you have?
We have 14 branches.
Wow. And what's the furthest geography on that?
Cortland.
Okay. Wow.
From Cortland to Clarence, which would be Buffalo.
Well, and I think that, let's say it's the 4 C's. So is capacity, credit, which means how well you've been paying your credit, character, and collateral.
Yes.
So how well you've been paying and how much you're borrowing against, what you have, which is, of course. And I think we've kind of gotten a little bit away from, the fundamentals and everything in life these days. And that's one of the fundamentals.
It is, for sure.
So credit unions, we're about to go into a break in another minute or two, but I want to get into the difference between a credit union and a bank and how safe your money is with a CD, or, some people are concerned with inflation these days, and your view of what inflation is, because my particular view of inflation is different depending on, who you are and where you are in your life, I think. And, things go up and down all the time. I mean, I lived through you're not old enough, I'm sure, to live through the Jimmy Carter administration. But when mortgage interest rates are 14% and you got 20% on your CD, we're complaining now that your mortgage interest rate is 7%. Well, back then, it was incredibly high, and the compounding effect of that. And I guess especially since a lot of our listeners might be our age or my age or older, what we need to do to ensure some security for that in the future. So with that, we're going to go into our first break, and we'll be right back and talk more to Laurie right after this. This segment of the No Nonsense Roundtable is brought to you by McClure, Chrysler, Dodge, Jeep, Ram, Chevy, and Buick in Perry. Hey, all new car dealers pay the same price for their new cars and trucks. There's no volume discount. So your buying decision now comes down to price and ease of doing business. Family owned for generations, you'll find John McClure himself there in the dealerships day to day, and you get a great no-nonsense deal you'll be hard-pressed to find anywhere else. Contact them at McClure-ChryslerDodgeJeep.com or simply go to NoNonsenseRoundtable.com to connect with them. Hey gang, this is Dom. Last week I went to see another show at Fanatics Pub and Blue Stage in Lima. Grammy winner Bobby Rush was there in front of a packed house. It was a blast. But I have to say, it's always a blast at Fanatics. Good food, great entertainment, and a great atmosphere. And let me tell you, it's easy to get to. Just scoot down 390 about 10 minutes past Marketplace Mall to exit 10. Take a left, 2 lights later, and you're there. My Jeep will probably be parked out front. I'm there all the time. Go to fanaticspub.com for more details. Well, welcome back. We're listening to Laurie Baker, President and CEO of the Summit Federal Credit Union, talking about banking and the credit union itself. And the compelling question is, what is the difference between a bank and a credit union?
So banks and credit unions offer similar products. However, they're structured differently. So a bank has stockholders, and a credit union is not for profit and does not have stockholders. So the members of the credit union own the credit union in essence, and they're governed differently in that the credit union has a volunteer board of directors that is not paid. They have to be members of the credit union, and they are there to represent the membership.
So you can offer services that a bank doesn't. Is that true?
Banks offer pretty much the same services that we do, depending on the bank. Mm-hmm. So it's very similar. Sometimes it's the way you offer it,
okay,
or the creativity that might go into that.
Well, let's talk about some of the services that you have. I mean, mortgages, obviously.
We have mortgages. We have car loans and personal loans and credit cards. All the things that you might expect, checking accounts. But then we have some extra things, and I'll give you an example. It's not a product. It's more of a service. Yeah. But we can do business virtually.
Okay. So
our members can call if you prefer not to leave your home, and this actually started during COVID. You're able to have a Zoom call with an employee of the Summit and do your finances, ask your questions, apply for a loan at your home on your laptop.
And these people are, I would imagine, since it's a local business, these people are all sourced locally too. You're not calling Sri Lanka.
No, they're all sourced locally.
Yeah.
Yes, they're all in Rochester, actually.
Well, that's the thing these days. The thing about a bank or a credit union is that ultimately you're dealing in a commodity. Okay, so the difference, the small difference in interest rate that you could give somebody plus or minus or whatever, is not the compelling reason you go to one bank or another, because you're basically lending money and borrowing money about the same. So it has to do with the feel of the business and your engagement with the community, and if you feel that there's somebody to talk to. I talk every once in a while. I have the honor of speaking to a class at RIT, a business class, and I talk about the difference between like a Wegmans and some other grocery store I won't mention here, okay? But the Wegmans has a connection with you. The businesses that do that, the Red Wings have a connection with you. The RPO has a connection with you, and it's something that's kind of ethereal. It doesn't have to be articulated, with certain in a certain way, but it's sort of like a feeling, like you get it,
Well, I think the most important thing is that you trust your institution. Right? And trust is so important. And if you don't trust, you won't have that connection. So right. I guess that's one of the most important things. But we take great pride in the type of people that we hire and employ. And we expect great service. We expect our members to receive great service. It's really a family atmosphere. We have a lot of long-term employees who've really dedicated their lives, their careers to the credit union. We're value driven. And I would say, that differentiator is definitely the service we provide. But I will disagree with you on one thing.
What's that?
You said rates are basically the same wherever you go, and that's not the case.
Okay. I'll stand
You need to shop
corrected.
around, Dom.
Okay. So I guess my contention was that you would find a small difference in rate, but you're not going to get 25% better. Might get 25 basis points, but you're not going to get,
You might get more than 25 basis points, not 25% better.
Yeah, that's what that's where I was alluding to. So you got to let me off the hook with that one a little bit. Okay, boys and girls, you heard it here first. Car loans at 1.5% this Saturday at Summit Credit Union, right?
Right. You took me a little off guard with that one.
No, I had to get you back for that, for telling me I was wrong. I mean,
Doesn't happen often, does it?
No, ask my wife. Me being wrong only on days that end in Y. So the whole idea of community banking is something that's ingrained in society, and it's like the Bailey Bailey Savings and Loan, where money is invested in a particular geography and community and whatever. The thing that's fascinating to me is the concept now of these online banks. I mean, you talk about trust. I mean, there's no there. Yeah, I just don't get that. I mean, do you see this as a challenge for your business, or do you think it's kind of like a fad that's not going to go all that far?
Oh, I don't think it's a fad. I think that, people get what they're looking for. Maybe not everyone is looking for that personal connection, but I think the bulk of individuals are. But for sure, that's there to stay. Doing your business online and all of that is very convenient for people. And it just is. Well,
I think one of the things that you talk about trust is that we've seen so many things online, with this, this Banks fella and the cryptocurrency, and now somebody said that my wife was telling me the other day that there's a currency. I guess they're looking for China, Russia, and North Korea and Saudi Arabia to create their own currency, which my Lord, that sounds like a disaster.
It does. It does, for sure.
Yeah, and your money here is backed up by certain accounts with the FDIC and whatever. A lot of our listeners are probably a little bit older, and one of the things that they're concerned with most naturally is this whole idea of inflation. So why don't you give me your spin on inflation? I mean, I was a young man during the Carter administration where the mortgage rates were 14%. Your CD was 20. I mean, it was like runaway. It's not quite that bad, but it's not good either.
Well, inflation is definitely here, but I do think in the coming year it's going to ease a bit. I really do, and it's cyclical for sure. But I think it will get better. I know some of the people maybe that watch your show are enjoying the higher rates on certificates right now. So we're enjoying that end of it, that end of higher rates. But on the, the borrowing side, it's very difficult right now for younger people or even older people to purchase a home. So that's difficult, but I do think it will ease next year.
Yeah, well, I mean, they were almost giving money away back, during the COVID months.
Giving it away in terms of...
No, I'm saying that the Treasury was making a very... yes. Well, they were trying to keep the economy going, but now there's a kind of a price to pay for it now, because that was irrationally low, right? I mean, when you were giving mortgage, or you're giving car loans at like 3%.
Right, and right now, most institutions are looking for deposits.
Mm-hmm.
Remember, people were, I don't want to say flush with cash, but many people had more cash than they normally would have during COVID. Right? Saved up. They weren't doing a lot. They weren't spending a lot. But since then, that's been depleted.
Right.
To some degree.
Well, and the thing is, like, if you were having home improvements and stuff back then, you got them done, and they're done once. So, yeah, it's got to kind of settle down into its own level very shortly. So we're heading into the news break, and we're going to talk about, we're going to talk a little bit more about inflation, FDIC, talk about the difference between CDs and savings accounts and whatever, and we'll be talking to you after that. This segment of the No Nonsense Roundtable is brought to you by Valley Fuel. I've used Valley Fuel now for about 20 years or so. Phil Saunders started the Valley Fuel business with a philosophy I subscribe to. Take care of the customer. Valley Fuel reliably and affordably keeps my propane tanks filled for my homes and businesses, but they also provide home heating oil, gas, and diesel fuel for residential, commercial, and agricultural applications. Contact them at valleyfuels.com or simply go to nononsenseroundtable.com to connect with them. Well, welcome back. You're listening to the No Nonsense Roundtable. Today's guest is Laurie Baker, President and CEO of the Summit Federal Credit Union. And one of the fascinating things I think from the get-go is that we were talking about your journey in life from wanting to do something in the arts to going all the way up to being a president and CEO of a great company like this. And so let's go a little more into that. I mean, like mentally where you were and how you got there, and why this particular organization and whatnot.
So I think I mentioned I went to SUNY Geneseo and also SUNY Binghamton. You might be interested to know that my major at Geneseo was sociology, and my major at SUNY Binghamton was social science. So all about people, right? Sociology and social science, which, it might not be natural to go from the arts, I guess, to a credit union, but it's very natural to go from wanting to learn about people and work with people and transitioning over to a credit union. And if you don't know, the credit union motto is people helping people. Mm-hmm. So it's a natural fit. I felt it was a natural transition for me.
Well, let's talk about that people helping people. Let's talk specifically some of the things that you do or the credit union does.
So from the credit union point of view, we sponsor and volunteer for many, many, many organizations, both financially, again, and with our time. From me, from the personal perspective, I'm involved in or have been involved in multiple organizations. So right now, one of the things I'm involved with is the Geneseo Foundation. I just joined the Geneseo Foundation, which is part of the college. And the credit union is also participating in the way that we are sponsoring first-gen students. So first-gen students are first-generation college students whose parents did not go to college.
Oh, wow.
So we're sponsoring some events for the college, and we're actually going to be offering some scholarships in 2024.
A great school. That's one of the things about New York. People complain about New York, but we do have a great university system.
We have a great university system, and I'm a little biased, but I think SUNY Geneseo is one of the best. And, I mentioned I'm from Long Island. I came up here with a lot of my classmates to go to Geneseo. As you might know, Geneseo has a lot of Long Islanders in their student ranks, but they all feel so sentimental about Geneseo, often staying here, like me.
I don't know what it is. When you were born and raised on Long Island, for some reason you went to upstate New York to go to school. My two sisters went to Oneonta. Nita, well, she's from outside of Syracuse, but she went to Geneseo. I went to St. Bonaventure. I mean, it's something that you have to get out of Long Island. I don't know what it is.
It's like a field trip.
Yeah, it's like a field trip. So let's talk a little bit about inflation, because I think people are worried about inflation. And like I said, it was years ago. It was really horrible. But, somebody said to me, actually it was another bank president, said something to me. We'll mention his name. Phil Saunders said something on the show. He says, the problem with it, he says, when you get used to paying $10 for a hamburger, it never goes down to $8. That's the problem with inflation, is that I think that, inflation was at 6%, but it's down to 3% now or whatever, but still it's added up. Okay, so it's like compounding in reverse, maybe you would call it, or something or other. So, but you do see some light on the horizon, I guess, right?
I do see light on the horizon, but I do recognize how difficult it is for some people to make ends meet right now, right? And employers understand that, because they need to pay employees enough that they can pay their bills, and it's a very competitive environment with people maybe potentially considering leaving because they can't pay their rent, right? And rent's very expensive right now, so. It is difficult, but as I said before, I do think it's easing a bit, but it's really difficult for young people when they're first starting out.
Well, and I think there's a concept I'll kind of pass by you. There's inflation and there's inflation. Inflation for a young person is much worse than inflation for an older person that might be set. I mean, when you're in a position like I am, pretty much retired, and the houses are paid off, and so inflation for me is going to a restaurant and the bill's 30% more than it used to be, or the gas went up, but it's not like I had to go out and buy a house and the mortgage is going to be that much more expensive, or the car loan is going to be more expensive.
And I believe in Rochester or upstate New York, for those who haven't been exposed to downstate, it's still pretty, it doesn't sound like, but it's still relatively affordable here compared to,
amen.
the greater New York area or Long Island, where I have relatives who are 35 years old who cannot touch a house.
Well, and this is another point that from dealing with you when I had the car business and the other banks and financial institutions, is that you because you're local, you get it. Okay, you understand that somebody who has $150,000 home in Irondequoit and they're making $40,000 a year, they're okay. Okay, if you have a $150,000 home in Hempstead, Long Island, okay, you wouldn't. I mean, you wouldn't have it. The house the home would be $500,000 to get the exact same home in Hempstead, and now you need a job that's going to pay $120,000 a year just to afford that. I mean, I think that has always been my perception. Am I right about that?
I think so. I think maybe it's more exaggerated down there with the haves and have-nots, because there are a lot of high-paying jobs in New York and even in the suburbs. There are people making a lot of money that can afford to live there. But what about the person working at the grocery store,
right,
or the pharmacy or something like that? Their wages are not. You just can't live.
They really don't keep. Yeah, they don't care. You could have a job as an auto mechanic here, afford a house just on the one salary. If you're in New York, there's no way that they're going to charge $200 an hour, for service to get an oil change. so you can afford the $500,000 house that would only be about $150 here.
Even the cost of food. I was just down there twice in September, and we go to Wegmans and pay whatever $1.99, $2.49 for a gallon of milk, and they're $6.
Yeah. So we're about ready to head to another break. When I come back with you after the break, I want to talk to you about where to place your money. What's the safest place to put your money? I mean, there's a lot of people that want to make a great return. There's some people that just want to make sure that they don't lose their money. So we'll talk about that, FDIC, securities, whatever, and we'll give people a little idea about that. So right after this, boys and girls, we'll have another talk. This segment of the No Nonsense Roundtable is brought to you by Brighton Securities. I've trusted George Conboy and his team over the years to do the thing they do best: listen and advise. Not everyone's investing objective is the same, and they've crafted a plan for me that fits my personal needs, and I really appreciate it. Contact them at brightonsecurities.com or simply go to nononsenseroundtable.com to connect with them. Welcome back. We're talking to Laurie Baker, the president and CEO of the Summit Federal Credit Union. And I called this section the retail section of the show. So let's put a little bright light on some of the stuff that you do, for the community and how involved you get with things. And I'll just let you loose and you can talk about those things. How about that?
Okay. So we'll start with, I guess, me personally. I think I had mentioned in the last segment that I'm on the board of the Geneseo Foundation. I'm also on the board of the Mary Cariola Center right now. And I've served on that board for about 6 years. It's a great organization. I just cycled off, but I was also heavily involved with the Villa of Hope on a personal level. I was on their board for many years. I was their board chair. Another great organization in the Rochester community. But one thing I want to mention, just on a personal level first, and even on the credit union level, is it's very important, or we feel, and I feel it's very important to be involved in the industry as well. And I'll tell you what that means. So I've been on the board of the New York Credit Union Association for over 15 years. And that's an organization who bands credit unions across the state together and really unites interests, and we act as a collaborative. And one thing some of your listeners may not be aware of is that credit unions have a cooperative spirit. And when I say that, for example, the credit unions in the Rochester area, we have a Rochester chapter of credit unions, and all the leadership from the credit unions in the area band together, and we have social events, we share ideas, we have roundtables together, we really lean on each other because we know the mission of credit unions is more important, and we're here for the greater good to help people, which is slightly unusual, I believe.
So you must be sponsoring some things over the month, over the year and the months. I mean, why don't you name some of those things?
Sure. One of the organizations that we do a lot with is Big Brothers Big Sisters.
Oh, really?
Yeah. So we sponsor them in the Rochester area. As I mentioned before, we have locations in Buffalo. We sponsor them in Buffalo as well as Syracuse because we have locations in that area, and we're very tied into that organization. Again, we're working quite a bit with the Mary Cariola Center. Right now, with the Villa of Hope, we're collecting holiday gifts for for their local kids, to enjoy. So we're doing quite a bit.
Now, what's important to a lot of my listeners is, like I said, maybe being a little older, is having their money in safe places. When I had my car dealership, I used to have a lot of money sitting aside in just regular checking and savings account. I had because the business was so fluid and so fluctuating that I told people all my money's tied up in cash. Mm-hmm. So the security of deposits and whatever is important to a lot of people. Now, you don't have FDIC, but you do have a way of guaranteeing people's deposits, right? Sure.
Deposits are federally insured, just like at a bank, but not through the FDIC. It's through the National Credit Union Administration. So very similar.
And up to how much per person?
It's $250,000, depending on how your accounts are structured, but $250,000 per account.
So a husband and wife can each have an account for $250,000, so
sure.
Up to $500,000, right?
Yeah, or more, depending on how their additional accounts are structured.
So talk to me a little bit about CDs as opposed to regular savings account. Now, the regular savings account, you get your money back. You can draw on your money at any point in time, right? But a CD, you're tying it up for a certain amount of time. What's the minimum amount of time you can sign up? And what's the difference in interest rate?
Okay, so with a regular savings account, you really need to know what your purpose is and what you're trying to do with the money you have. Do you want that money to be liquid? If so, depending on the dollar amount, I would put it in a savings account or a money market account. Again, a money market account or a money management account, you can get to that money right away. If you're looking for greater return, I would look into a certificate of deposit. The rates have been fantastic. We were in a rising rate environment for a long time, which means higher savings rates. I know our certificate rates are very, very good. And you had mentioned how do the terms vary? We have a 90-day certificate.
Oh, really? That low? I mean,
yeah.
Shorter
now, of
period
course,
of time. Yeah.
Sometimes, not always, the longer you keep that money on deposit, the higher the rate will be. But we just had a fantastic promotion, 5.5% APY, annual percentage yield for 10 months.
Wow, that is good.
Which is a great rate, and it's secure.
Can you explain to me, like, just a financial thing, like T-bills? Like the short-term T-bills has a greater return than a long-term T-bill. Like, people think that I don't get that, especially with inflation going down.
It's a little complicated. I don't know if you've ever heard of the term inverted yield curve.
No, explain that to me.
Oh boy, I don't know if we have enough time for me to explain it here. But look it up. If it's something you should definitely look into because it can change things a bit, but it's not typical.
What conceptually is that an inverted yield curve? You think that that things are going to get worse or things are going to get better? I mean, what is the psychology of that?
So you may have a certificate, short-term certificate rate that's fairly lucrative, fairly high. Yeah. And you may see if you go out several years that rate is the same or lower.
Lower, yeah.
And that may not make sense to you, right?
Right. It's kind of counterintuitive.
But it's sort of understanding that those rates will go down. And if you put that money out there too long at a very high rate, it may not be in the best interest.
Oh, so metaphorically, you're saying that you're going through a bump in the road right now, and that's why you're going to get better. Yeah, and then when things settle down, so things are it's like optimism for the future is going to be better than now. Yeah, sort of.
Yeah.
In Dom's terms.
Yeah.
Which I have no idea what I'm talking about. But anyway, we have just a couple of minutes left. What else would you like to tell 10 or 12,000 people?
Wow. I let's see. I guess this is the retail section. Is that what you said?
There's a retail section.
Okay.
Website address. How do we get a hold of you? And
I think what I'd like to say is, it's really important to understand the difference between banks and credit unions, right? We should all have that knowledge. And we would love to have your business at the summit.
Right. And the point being made is that it's actually owned by the members, right?
It's actually owned by the members. The members are the owners of the credit union. As I mentioned before, we have a volunteer board of directors. They're not paid. They're volunteers. They're members of the credit union, and their sole purpose is to govern the credit union, make sure that we do things in your best interest.
Well, and conceptually speaking, that would mean that their charge is to maximize the benefit to their members rather than their investors, which is the difference between a bank and a credit union, right?
Exactly. You got it.
And that's it. And be a member.
And be a member.
And car loans 1.5%. If you go to nononsenseroundtable.com and just click. No, that's not true. I'm just. We wish. We wish. Well, thank you ever so much for coming in and talking to us, Laurie. And it's been delightful meeting you. And I like to show people that are listeners great companies that are attached to Rochester and get it. And you seem to get it. So thank you ever so much. We'll have to have you on again.
Thank you. Great to meet you, Don.
Thank you. Bye-bye.
Thanks for listening. Tune in every weekend from 10 to 11 on News Radio Wham 1180. Don't forget to like and subscribe, and we'll make more.